Hello and welcome to this specialist trading presentation of 3 key strategy rules. Now in today's live presentation, I'm going to be revealing 3 rules to one of our best strategies that you'll be able to spot and identify setups such as this. As you can see here in this setup that was just a little while ago in the euro dollar, a buy signal was generated using the 3 key rules that I'm going to be sharing with you today. And hopefully you'll be able to spot and identify setups like this on your own and eventually be able to capture gains such as this as well. Now these are all part of my new Elite Forex Trading College. I'm going to be talking about and going over the curriculum as well as sharing with you these 3 strategy rules. So I'd like to welcome you once again. This promises to be a great presentation. My name is Steven Primo. I'm the president and founder of Specialist Trading. And for those of you who are new to my presentations, our company is first and foremost an educational company. Our only goal is not to force feed you signals and have you mimic trades that we put up and post on a daily basis. Our goal is simply to teach you how to spot and identify these setups on your own so that you can ultimately make your own trading decisions. This, in my opinion, is what I've discovered after nearly 4 decades of trading is the only way one becomes consistent, by putting the power back in your hands and making your own decisions so you don't have to rely on anyone or anything else to tell you what or how to trade. Now I know this because I've been trading, as I said, for nearly 40 years. I started my career on the floor of the Pacific Stock Exchange. My background is in stocks, but I've traded just about every market out there imaginable. I started trading on the floor of the exchange in 1977. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. Now, a specialist is simply a person that made markets in roughly about 50 stocks. So I've made markets during the crash of 1987 and the bull market that followed. I've seen just about every market environment imaginable. I've traded just about every strategy system around. So I know what works in terms of consistency and I know what doesn't. So all I do at Specialist Trading is teach and mentor my students all the things that I've accumulated in my nearly 4 decades and teach them so that you can ultimately empower yourself with all this knowledge that have stood the test of time. Now, once again, I'm going to be sharing with you these 3 key strategy rules, but before we begin, I ask that you please take a moment to view our disclaimer. We're required to show you this. I'm going to show you a lot of performance results using these 3 key rules, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you are taking a moment to view our required disclaimer, I would also like to take this time to actually make an announcement. And first of all, follow us on Twitter. There's our handle right there. You may want to follow us on a daily basis. I give free informational tidbits, anywhere from strategy signals to little bits of wisdom along the way. So copy down our handle right there at SPCLST. TRADG. In fact, a couple of days ago, I posted a really nice buy signal that one of our strategies generated. And earlier this morning, you would have exited with nearly a 20-point gain in the E-minis. Now, that's rather limited information on Twitter. If you'd like to get more detailed information, my sister site, which is Pro Trader Strategies, they're the one that put on my presentations and market and promote my courses. They've put together a Facebook page, so simply log on to Facebook, go to Pro Trader Strategies. There's a lot more detailed information, a lot of videos and information about what we do and what we teach. Now, as I stated, I want an announcement to make. In just a couple of weeks, I will be speaking at the CBOE and Option Pit Professional Trader Summit. Now, this is going to be held in Chicago at the Chicago Board of Options Exchange right there on the floor. So I'm really excited about this. There's going to be a lot of other great speakers. I'm going to be sharing with you a lot of information. This is going to be July 20th and 21st. And there's also going to be a special VIP session on Friday, July the 22nd. So that's coming up very soon. There is the link at the bottom right there. It's not a live link. You'd have to copy and paste that onto your browser to get more information. But also I'd like to tell you to contact Pro Trader Strategies. They are the ones that put on this presentation, this webinar today. And I believe they may have 2 free promotional tickets or discounted tickets to the Professional Trader Summit. So contact them and they can give you more information about that. But I'd love to see you. I know last time I spoke in Las Vegas, I met a number of our students and people out there that were interested in becoming members of Specialist Trading. So it's great to always see you in real life and talk to you and maybe share a drink or talk with you a little bit more about what we do. So I'd love to see you. That's July 20th and 21st, and the VIP session is on the 22nd of July. All right, so I'd like to start out by sharing with you what I learned from trading on the floor of the exchange, because as I stated, we are first and foremost an educational company, but I had to be educated myself. Now, before I begin sharing with you what I learned and what has really sustained me, just a few announcements. I know this is going to be conducted like a class, so just like a classroom, I will take questions, but kindly wait till the end of the presentation to ask any questions. That way, it seems to flow a lot smoother, and we don't waste a lot of time when oftentimes the question is answered the very next slide. So if you do have a question, please wait till the very end, about another 20-25 minutes, and then I'll answer all questions then, okay, after we go over the 3 rules of the strategy I'm going to be sharing with you today. Now, the one question I will answer, and that is the most popular, and it's always, is this being recorded? Yes, it is. So if you have trouble with your connection, or if you have to leave early, Pro Trader Strategies will furnish you with a link to this recording so you can watch it at a different time, okay? All right, so kindly wait to ask any questions. Now, once again, I wanted to start out by sharing with you what I learned trading on the floor of the exchange, because as I've mentioned many times, even though I started my career on the floor, on the trading floor with hundreds of other traders down there, I had a very difficult time. In fact, I was no different from someone who was struggling with their trading today. I was trying to do all the right things. I was going to all the seminars, reading all the books, but nothing seemed to be working. Sure, I would have maybe 1 or 2 good trades, but then I'd give it all back on the next trade. And I'm sure a lot of you are going through that exact same scenario right now. So I know what you're going through. It's very frustrating. It's very depressing because you're putting a lot of hard work into trying to make this work, and you're seeing no results, or at least sustained results. So I had a few mentors on the floor, and they were able to see how frustrated and how desperate I was because I didn't know how much longer I was going to be on the floor. And they shared with me, and I'd like to share with you what I learned trading on the floor. Because here's what they stated. They said successful trading should be non-subjective. So what does that mean? Well, it means that 2 traders looking at the same chart should come up with the same exact scenario about what they feel is going to happen. But how many times do you talk to a fellow trader or somewhere in a class or some chat room, and you think that a perfect stock or a future or forex currency pair should be bought, and someone says, no, it should be short. It's a tremendous short. Everyone comes up with different ideas. Well, 2 people looking at the same chart, the same scenario, should come up with the same objective. It shouldn't be that different from one another. So trading should be non-subjective. Now, my mentors also taught me that successful trading should be consistent. Now, sure, everyone knows what consistency is, but really, no one really goes for that. That's not their goal. What we're looking for is mainly home runs. I know I was looking to make millions and millions of dollars really quickly and easily. But that's not what our goal should be. We should be looking for a method or some type of strategy or technique that has more of a 2 steps forward, 1 step back approach, so that we know we are going to have small losses from time to time, and that's perfectly normal. That's okay. But as long as we make back and recoup those losses and then get back on track again, that's what we should be looking for, because that's what will sustain you, not some fly-by-night, get-rich-quick strategy that produces thousands and thousands of dollars one year, but then gives it all back the next. So trading should be consistent. Next, trading should be as simple as possible. Look at your own trading plan. Is it full of convoluted indicators and looking at a bunch of news and a lot of subjectivity where you have to decipher what this means and what that means? And it's too complicated. Most traders have been taught, myself included, that the more complicated your trading plan is, the more valid it will be and the more successful it will be. When in actuality, what I've learned in my nearly 4 decades of trading is that it's the opposite, is that the more valid and successful a trading plan is, the simpler it is. So it should be as simple as possible, 4, 5, 6 rules tops, maybe 1 or 2 indicators tops, okay? Keep things as simple as possible. And lastly, the most important thing they taught me is that successful trading should make you a part of the process. This is the most important thing I learned on the floor. And through my 40 years of trading, I've seen how powerful this is. Because look at your own trading. How many times do you go to a chat room or a trade room, or do you watch some supposedly some trading guru on TV, or even go to webinars or seminars and listen to what they're telling you? In other words, trade off of what their advice is. In other words, buy the market or sell the market, what they are saying or touting, trade this perfect time frame, or trade this perfect market, or trade this perfect setup, and that's what will make you a successful trader. You see, when you do that, what you're basically doing is taking yourself out of the game. You're basically telling the markets, I don't know what to do, so I'm just going to mimic and follow what this guy does. And that couldn't be a worse thing to do because, in my opinion, it's a recipe for disaster because everyone has to trade their own particular style. They have to trade what suits their needs. If there's one thing I've learned is that no two traders trade alike, and they shouldn't. What you should be doing is getting all the sound information, having someone that mentors you, and then mold it to fit your needs so that you feel comfortable in trading whatever time frame you feel is the most comfortable, in trading whatever market you feel is the most comfortable. So this is what successful trading is. Non-subjective, consistent, simple, and should make you a part of the process, meaning that you make your own decisions. You don't go to a trading room to find out what to trade that day. You don't have a signal service which tells you what to buy or sell, and you don't follow some trading guru to tell you what to buy or sell. You make your own decisions. So it wasn't until I started following these 4 tenets that I started to become consistent in my own trading, and I really feel that these 4 things have made me a consistent trader so that I've been able to trade for nearly 40 years. So these are all the things we teach and advise all of our students and members at Specialist Trading. Now the good news is that each and every one of these categories is exemplified tremendously in my new Elite Forex Trading College. Now I only give this once or twice a year at tops per particular market. The last time I gave the Forex College, I believe, was a couple of years ago. So I'm excited to say that we're starting a brand new Elite Forex Trading College with a few different strategies that we didn't have in the last trading college. Now here's the curriculum of what we're going to be sharing before I go into these 3 strategy rules here. Week 1 is the foundation and building blocks of Forex trading. We're going to go a little bit more into what I believe is a philosophy for becoming a consistent trader. In week 2, we'll talk about Forex strategy number 1, probably one of our best pullback strategies, only uses a specific indicator, a proprietary indicator, which we show you how to use, which identifies these great pullback moves. Week 3, we'll go into Forex strategy number 4. Now that's probably our most consistent strategy to date because it transfers over so well into any market in any time frame. So you can pick whatever you'd like to trade. Week number 4, we go into Forex strategy number 5, which is specifically designed for candlestick traders. It's a candlestick strategy. It's one of our best candlestick strategies we have today. Now week 5, we talk about one of our most, I would say, consistent tools. It's not a strategy, but it's a tool for identifying the trend. That's our proprietary PET-D tool. It's a great trend identifier. It also confirms signals that our strategies generate. So we teach you how to use that. This by itself is just worth its weight in gold. It's a great, great tool. I've been using this on a daily basis for nearly 40 years. And lastly, in week 6, we'll put it all together, but we'll also talk about advanced trade management. You need money management, and I'll go into a little further detail about what we feel advanced trade management really is. So these are all live classes. They're small classes perfect for mentoring and for talking to you personally, and we'll structure them in a 6-week time span. But the beauty is that it doesn't just end there. Once you become a member of our college, you're a student of mine for life. So you can always correspond with me and ask me questions whenever you'd like pertaining to these strategies or techniques or methods we have. Now, I want to talk about Forex strategy number 4 today because what I'm going to be revealing are 3 of the rules that make up this one of our best and most consistent strategies in terms of consistency. This is strategy number 4. So let's talk about this a little bit, all right? As we say, we're going to be talking about this in the college, but let me go give a little detail about what strategy 4 is and who it's for. It's for traders looking to catch quick momentum moves. Now, when I first learned this strategy on the floor of the exchange, we used this to catch quick momentum moves that would last maybe 5 or 10 minutes because we were trading on the floor. We were in and out of trades in a matter of minutes. But we've designed it in such a way that you can trade it that way if you like, but you can also trade it as a swing trade or even a longer term trade. So we'll show you how to do that in the course. So don't feel as if this is just a scalping type of strategy. It is in no way that way at all. It is a great, great way for catching momentum. Now, it's for all students, so you don't have to feel as if you need to know a lot if you've been trading for 30 years in order to trade this. We have people that have just started trading in a matter of weeks. They've only been trading that are members of our Strategy 4 course. We also have hedge fund traders that have used strategy number 4. So it doesn't matter. Everyone gets the same basic format. And then once you understand the basic format, then we start giving you advanced tools, showing you how to trade it conservatively, aggressively, however you'd like to, so you can fit your style. That's what we're looking for. Next, it's a pattern recognition strategy. So it's very simple. We're simply looking to identify a pattern. All right, we're not looking for any news events. We're not looking for any convoluted indicators. We're simply looking for a particular pattern within the bar chart. Now, its intensity level from 1 to 3, if 1 was the most intense of all strategies where you basically couldn't even leave your computer screen, you had to stay glued in front of it 24/7. And if 3 was the most relaxed, you could basically enter an order and walk away for a couple of days. It's right in the middle. It's a moderate number 2 intensity level. Now remember, once again, our edge here is consistency, which strategy number 4 is really based in. I'm not going to tell you that every trade is a winner. There will be small losses from time to time, but that's okay. The beauty of this strategy, and all of our strategies for that matter, are able to recoup many times their losses, oftentimes on the next setup. So, even though we're not looking for these home runs, many times you will get these home runs. I'll show you a couple of examples in just a few minutes. But remember, we're not looking for that. We're just looking for consistency. And that's all we're looking for, a 2 steps forward, 1 step back approach. All right, so let's go into the indicators. Remember, once again, excuse me, we're going to go over in detail the majority of the rules. In fact, you're getting roughly over half of the rules to this particular strategy. I believe there are only 5 rules in it. We're going to give you 3 of them altogether today. But please remember that these are just the most important rules, and we're going to share with you the indicator as well. Now, if you don't get all this or are able to write it down, remember, this is being recorded. You can kindly request a link to this recording at the end of the presentation. So don't feel you have to copy everything down and get it right away. Okay, so here are the indicators for this particular strategy. We're going to use our buy-sell line. All right, now many of you are probably saying, the buy-sell line, what is that? I've never heard of that. Well, don't worry. It's not complicated. Remember, keep things as simple as possible. The buy-sell line is simply a 50-period simple moving average. That's it. That is the only indicator we have. We don't care about, oversold, overbought. We don't care about volume. We don't care about looking at different time frames. Keep things as simple as possible. This is the only indicator you'll have on your screen, a 50-period moving average. Okay? So let's go into these rules here for buy. Remember, once again, don't feel as if you have to copy everything down and hurry up, because I want you to understand these rather than copy them. This is being recorded. You can always request a link to this recording. All right, this is for all time frames. Remember, I'm going to show you examples in some daily charts, but you can use this for 5-minute charts, for weekly charts, monthly charts. It absolutely makes no difference. Okay, first rule. Closing price must be above the 50-period moving average. All right, that is ideal. Now, sometimes you'll see the bar go below the 50-period moving average. We'll show you a few examples, but we want to at least close there. And if you're going to enter, you must enter above the 50-period moving average to go long. You can't enter to buy below a 50-period moving average. All right, we're going to look to buy when a price bar closes in the top 25% of its range. And I'll go over that in just a few minutes, because this is our setup bar. And then the third rule is we're going to buy when price trades 1 to 3 pips above this setup bar's high. Okay, that's how simple it is. We look for a bar that closes in the top quarter of its range and it's above the 50-period moving average. Now, if we trade 1 to 3 pips above, it's up to you. Some of our traders like to trade the minute it trades 1 pip above. Others like to wait for 5 or 10 pips. It's up to you. We say on average the basic format is 1 to 3 pips. That's your buy setup, okay? You simply buy at the market, or you can have a limit in there if you like. Now, if the price bar does not trade 1 pip above the setup bar's high on the next bar, we're going to negate the trade. In other words, this has to happen on the very next bar. We can't wait 5 or 6 bars for this to trade above that setup bar, because we're looking to catch momentum. And if it doesn't happen on the next bar, most likely the momentum has dissipated. So we want to catch momentum. This means it has to happen on the next bar. All right, so let's go into some visual examples to make more sense. We'll take it step by step so that you fully understand this process. All right, step 1. Price must close above the 50-period moving average. Okay, so simple period moving average. So if we look at this generic chart here, we see that the majority of price bars are closing above the 50-period simple moving average. We have one bar here that closes right on it. We have another bar that goes completely below it, but where did it close? It closed above it. So these are all fine. Okay, so that's the first rule. Second step is we're going to look to buy when a price bar closes in the top 25% of its range. This is our setup bar. Now, we're not going to buy right here. We have to wait for it to trade above, but we have to identify this setup bar. So as we can see here, none of these bars close in the top 25% of their range except this one. Now, someone is saying, well, I don't understand. What do you mean by top 25% of their range? Well, simply divide whatever bar you're looking at by 4 separate but equal divisions. Okay, now this is very simple. After a little practice, you'll be able to see this in a matter of seconds. And you have 4 separate but equal separations here. Now, if you close in the very top 25% or top quarter, and you're above the 50-period simple moving average, as we are, that is a valid setup bar, okay? Now, there are 2 other remaining rules of this strategy, which I can't divulge right now. It would be fair to the people that have spent good money that purchased strategy number 4. But if they are met, they will form what is called a valid setup bar, okay? As you see right here, this is a valid setup bar. Now we go to step 3. We're going to enter to buy when price trades 1 to 3 pips above that valid setup bar's high. Here's the only caveat. It has to happen on the next bar. We can't wait for 5 or 6 bars for this to trade above. It has to happen on the very next because we're looking to catch momentum. We want the momentum to continue to the upside. Okay? If it doesn't happen on the next bar, we negate the setup altogether and wait until another one has been generated. So as we see here, this is where we're going to buy, but it has to trade there. As you notice, I didn't say it has to close there. It has to trade there on the very next bar, okay, right here. So let's see what happened. Well, it did trade there. So guess what? We are now long whatever this currency pair is. So we've purchased it right here, and as you can see, momentum continues to the upside. This is how simple this is. Now, I can't tell you where the exit is, and I can't tell you stop placement. Those are part of the rules, and I can't give you this particular pattern we're looking for. But you have the gist of this and how it works, and you'll see how simple it is while I go over some more trade examples, okay? These are some recent strategy number 4 trade examples. And remember, if we're selling, we're just going to do the opposite. We're just going to turn everything upside down. Let me show you some visual examples. It'll make a lot more sense. It'll be clear if you're a little bit confused. All right, here's that example of the euro dollar I shared with you in the very first opening segment of today's presentation. All right, where is price? First rule, where is price in relation to the 50-period moving average? Okay, price is above. So this means we're going to be a buyer. Do you see how that simple rule of this indicator, the buy-sell line, automatically eliminated what we feel will be half of your losses? Why? Because you're in sync with the overall trend. So if price is above the 50-period, the overall trend is up. If the overall trend is up, do we want to sell? Absolutely not. We want to be in sync with the overall trend. So if the overall trend is up, we want to be a buyer. Now we look for a bar that closes in its top 25% and meets the remaining rules of the strategy. Well, that's this one right here. In fact, our software generated a buy signal, as you can see with that up green arrow. This was a valid buy setup. But it doesn't mean we can simply buy at the market. If we're trading the basic format, we have to wait for it to trade here. And remember, it doesn't have to close there. All it has to do is just trade there, but on the next bar. So, as you can see, it did trade there. So we entered long the euro dollar and 250 pips in the next week. See how simple this is? We didn't have to look at any news. We didn't have to go to any chat rooms. We didn't have to have a ton of convoluted indicators that we really don't understand. No support lines, no volume or any feel of what the institutions are doing. It doesn't make any sense. That stuff doesn't matter. Trust me, I've been trading for nearly 40 years. I don't look at any of that stuff. All I do is look at these specific patterns, and the market tells me what I should be doing, not an outside source. Remember, as I stated in the very opening segment, the only way one becomes consistent, in our opinion, is by making your own trading decisions, not by listening to outside sources of people or indicators telling you what to do, but simply by listening to the market you're trading to tell you what to do. You notice here we didn't have to look at the weekly chart to find out what to do on the daily chart. You don't have to do that. I mean, if you want to, you're more than welcome, but that's not even required. All we say is trade the chart you're looking at. Keep things as simple as possible, and you'll get onto that road to consistency. Now here's an example here going back to March or April in the Canadian dollar. As we can see here, price is below the 50-period moving average. The very beginning we were touching and oscillating above and below, but the majority of closes were below the 50-period moving average. So where's the overall trend? The overall trend is down. I don't care what anyone says in a chat room or what some guy says on TV or what the economic news is. If we're below the 50-period, the overall trend is down. That's all I need to know. I'm going to be a seller. But I can't just sell at the market. I need to look for this pattern where a bar closes in the bottom 25% and it meets all the other rules of this specific pattern. Well, it happened right here. The software generated a sell signal as deemed by the red arrow, and so this was a valid setup bar to go short. But once again, if we're trading the standard format, we cannot simply sell. We can only go short if we trade 1 to 3 pips below. And this has to be on the next bar. So let's see what happened on the next bar. Well, look what happened. It definitely went below and it closed a lot lower. So we got short the Canadian dollar at the beginning of March, and in the next 2 months, the Canadian dollar went down 1,000 pips. Now, we're not saying that you would have stayed in to take a 1,000 pip gain, but that's how much room you had to work with by following these simple rules. You could have taken a 20 pip gain. You could have taken a 100 pip gain. It's up to you. So once again, the power is in your hands, but we're just giving you consistent high probability setups for you to take. And once you miss the first one, don't worry, there's often 1, 2, 3, many more setups that you can get involved along the way. So you never have to feel as if, well, I missed it, I guess I can't go short the Canadian dollar, because as you well know, the Forex markets are some of the best trending markets. And as long as it's trending, you'll be able to find these setups all over the place. Now here's the Australian dollars. We can see, now this is a daily chart of the Australian dollar, March, April, and coming into May. All right, price in February crossed above the 50-period moving average. So look at all the setups that were generated. Had you taken that very first one at the end of February coming into March, well, that's 600 pips in your favor in 2 months. You could have decided once again to take a 50 pip profit, maybe 100 pip, 200 pip. Once again, it's up to you. You put the power in your hands. Don't ever listen to anyone tell you how to trade. Trust me, if that works so well, why do the majority of traders fail? If everyone is listening to someone with a perfect system, if some guy in a chat room that has all the perfect trades, then why do the majority of traders fail? It's because you're relying on someone to tell you what to do. But traders, I've found in my experience, the ones that are consistent are the ones that make their own trading decisions. Now, the beauty of the strategy number 4 setup is that you can be applying it to virtually any time frame. Here's a weekly chart of the Canadian dollar. We're not going to change the rules just because we went to a different time frame. And we're not going to look at a monthly chart to tell us what to do on a weekly chart. Absolutely makes no difference. We just trade the chart we're looking at. So where are we in relation to the 50-period moving average? We're above. Okay, so we're looking for buy setups. Same thing applies. Here's our buy setup that was generated by the software, and we would have bought on the very next weekly bar because we traded above, and look what happened. All because it fit the pattern and it has a high level of consistency. Once again, not every trade works out perfectly, but we're having the odds in our favor now because we're trading with consistency and we're not relying on anyone or anything to tell us what to do. We can apply this to intraday trading. Here's the Swiss franc. Here's a 60-minute chart. Now, most of the emails I get from our students are, well, Steve, what happens when the trend changes? Oftentimes, am I going to get sucked into, a whipsaw? Remember, once again, we're not saying that every trade's a winner, but if you trade in sync with the 50-period moving average, you will have the odds in your favor. As we see here at the beginning of this 60-minute chart, we were below the 50-period moving average, so that is telling us on an hourly time frame, the overall trend is down. So we are below the 50. We're only looking for sell setups. And look at all the sell setups you would have had here to go short. Each one would have resulted in a profitable trade except for this last one. So at least you would have had 3 profitable ones and 1 losing trade. But that's okay. Once we switch to going above the 50 period, well, now we switch gears and now we're buyers. And then you simply go back to being a buyer, and now you would recoup that loss, and now you'd be back on the positive column again with 2 more winners. Now, these strategies work best with currency pairs, and we teach you in detail how to apply them to currency pairs in whatever time frame you choose, whatever market, whatever direction you want to be trading. Here's the beauty of these strategies, though. You can also apply them to stocks, ETFs, futures, and commodities. So if you like to trade multiple markets, it's not as if you have to buy a completely different package in order to trade those. You can also use these as well. All right, with just a few minor changes, you can be trading stocks, ETFs, futures, and commodities. In fact, let me show you some signals that were generated using the same strategy 4 rules I taught you. Once again, in this example in Kellogg that happened just a week or so ago, where our prices, the majority price is closing here in June on Kellogg. Are they closing below or above the 50-period moving average? They're above, right? So we know that we're only going to be looking at Kellogg for buy setups. We're not going to simply buy at the market because it's above the 50, but we have to look for buy setups. We're not going to even be thinking about selling it. I'm sure someone would say, well, Steve, we're just kind of going sideways here. There's no indication. I have to wait for some news. I have to wait for maybe the volume to pick up before I can do something. What are you doing when you think that way? You're looking for outside sources to tell you what to do. Remember, the market tells you just about everything you need to know. In fact, a buy setup was generated here on the 29th of June, just a few weeks ago in Kellogg. Okay? So using the same rules, we close in the top 25%. And if you would have purchased just above there, well, you would have made 5 points in the next day. Obviously, some news or something came out in that stock. We had no idea. The only idea we had was by using this pattern that we share with you in the course and by applying the rules I just shared with you as well. You can also use this to go short. This was a couple of weeks ago in Delta Airlines. Where is price in relation to the 50-period moving average? Price is below. So are we going to buy anything? Are we going to be looking to buy? Absolutely not. The odds will be in your favor if you are in sync with the overall trend. This is why most traders fail, because they're doing the opposite. They buy below the 50 and they sell above the 50. For some reason, we've all been taught to try and pick bottoms and tops, but there's no consistency in that trading. It's better and more consistent if you're in sync with the overall trend. Now, people always say, well, Steve, I don't know what the overall trend is. Apply a 50-period moving average. That's all you have to do. It doesn't cost you anything. It's on almost every major charting software package. Now, on the 22nd of June, a few weeks ago, we closed in the bottom 25% of its range, that particular bar, and all the other rules were met of the particular pattern, so we generated a sell signal. And as you can see, the stock went down 6 points in 3 days. Now we can also apply this to ETFs. This is IWM. This is a little bit more advanced trade because we're actually above the 50 and then we're below the 50. Now for 3 days we closed in consecutive fashion below the 50, but guess what? We have a bar that closes above and it's in the top 25%. So even though it's a little bit more aggressive, a little bit more advanced, it is a valid signal to go long. We wouldn't suggest our beginners to trade this, but most of our traders, after they get a little experience under the belt, will look for these more advanced trades. So this was generated in May, and the IWM, which is the ETF for the Russell 2000, went up 8 points in 2 weeks, which basically symbolized roughly thousands of points in the Dow. Now here's a 10-minute chart of the E-mini futures. You remember when the news came out on Brexit, a lot of people were saying, boy, Steve, you know, the market just gapped down so far and there's no way I could figure out what to do. You know, it's not fair for this little traders here that like to intraday trade. Well, here's a perfect example in E-mini. Here's a 10-minute chart of the E-mini futures. All right, sure, the market gapped down on that news. If you start out fresh that day, you would have seen that price was below the 50 period. So you know right off the bat, all you're going to be doing is, as long as we're below the 50s, you're going to be a seller. So right off the bat, you know what to do. You're not going to be looking to buy anything. In fact, the only people that would have lost on this particular day were the people looking to buy. But we know if price is below the 50, we're going to be a seller. And using the same 3 rules I shared with you today, well, guess what? There was a sell signal generated in the first hour of the day. And had you stayed in long enough, you could have generated 40 points in your favor. That's $2,000 per contract. Once again, we're not saying that everyone stayed in there for 40 points, but you could have taken 1 point if you wanted. You could have taken 10 or 20 points. It's up to you. Now, lastly, we're showing you signals using the same rules, all the same requirements for crude oil. This was back in April and May, and 2 buy signals were given right at these bottom of these pullbacks here, okay? So it doesn't matter what you're trading. I don't want you to feel as if, well, you know, Steve, I trade Forex, but I also trade commodities or also trade futures. That's fine. You can transfer these strategies, just a few minor alterations, and we show you how to do that in the course. Now, 2 extra bonuses in the Elite Forex College that we're sharing with you. We're going to be talking about ATM and PET-D, all right? Abbreviations for two great, powerful tools we're going to be sharing with you. Let's talk about ATM. What does that stand for? It stands for Advanced Trade Management. This was another technique I was taught many years ago that really has saved me a lot of money, because this technique, which I'm going to be sharing with you, tells you when to trade and when not to trade. It tells you when your strategy is currently in sync with the market and when it's not. Let me share an example here. Here is an example, or example, in the euro dollar. Now, these are all signals generated by some of our strategies. And as you can see here, each and every signal was profitable. Each and every one worked. And we all love when we have market conditions like this, okay? When the market conditions and the environment is perfect for our strategies, everything seems to work. It's like we can't fail. But using the exact same strategy a few months later, look what happened. The exact same rules, nothing worked, okay? So once again, this will happen from time to time because the environment changes. The beauty of the ATM method is that oftentimes it will keep you out well before these environments change, so that you may experience just a few losses, but you won't experience that long delayed drawdown. And we teach you exactly how to do that with our Advanced Trade Management. This is such a great tool. In fact, we do not offer this in any other individual course other than the colleges. All right, this is not an individual course you can pick up and purchase. Now, secondly, we offer you the PET-D, one of our most consistent trading tools we have. I have been using this for nearly 40 years now. I was taught this on the floor as well. And this is a tremendous trend identifier. What we've done is we've changed this to a formula I learned on the floor, and now we call it the Primo Early Trend Detector. Because when I originally started using it, it was just simply the formula, something that you calculated by hand each and every day. But now that we have high-speed computers and programmers, we've been able to make it into a proprietary color bar algorithm. So here's how it works. If you see a series of green bars, well, the short-term trend, not the overall trend, but the short-term trend is up. Conversely, if you see a series of red bars, the short-term trend is down. Now, this is a great tool because now that we know the 50-period moving average is telling us what the overall trend is, we can be in sync with the short-term trend as well. So the beauty of the PET-D, as you see here, is that it tells you which direction you should be trading. Remember, it's not a strategy, it's not a system, it's a trend identifying tool. But once you know the trend direction, then that's the direction you should be applying your strategy to. It's that simple. So you don't need to guess. You know the overall trend, and once the bars are in sync with the overall trend, well, you've got that wind at your sail. You've got that current at your back. Works the same way on the downside too. If you see a number of red bars, you know you shouldn't be buying. This is telling you the direction of the short term. And this can also work on long-term issues as well. Here is a monthly chart of the S&P 500 index. As you see here, we have the going back 20 years, the chart here of the S&P. We have the dot-com crash, we have the banking crisis in 2008, and then we see the current market, how we've been going straight up ever since 2009, 2010. Once we apply the PET-D, we see that the PET-D can also identify long-term trends as well. When the majority of bars are a specific color, that's the side of the market you should be on. Once you get 3 or more change in color, that's telling you the side of the market you should be on. All right, so let's review once again the curriculum. Week 1, we're going over the foundation and the basic philosophy and building blocks of Forex trading. Then the next 3 weeks, weeks 2, 3, and 4, we give you our best strategies. Strategy number 1, strategy number 4, and strategy number 5. We have a pullback strategy, a very consistent strategy for all markets and all time frames, and a candlestick strategy. In week 5, we give you the PET-D, that great trend directional proprietary color bar tool. We tell you exactly how to use it to increase your odds for success. And in week 6, well, we put it all together. We also give you all the rules on how to calculate advanced trade management. Okay, it's a great course. We only offer it, as I said, once a year, and now we're happy to offer it again for our Forex members. Now, one other thing you're going to be getting with this for a limited time are email alerts. Now, these are only for educational purposes. Remember, it goes against our philosophy to simply tell you what to buy or sell. We don't believe in that, and in fact, we would be doing you a disservice by telling you what to buy or sell, because we want you to make your own decisions. but we offer you this as an educational tool while you're learning so that you know what to look for. In other words, we're kind of giving you the answers to the test prior to taking it because we want you to know what you're going to be identifying on your own. So we furnish you with email alerts. For example, on the 16th of May here, we had an email alert telling you that strategy number 4 had generated a new signal. Now, this was a signal to go long the British pound. This was before the news came out. And as you can see, we're above the 50-period moving average. We close in the top 25% of our range, and a buy signal was generated, and it gained 300 pips in the next 2 weeks. You would have been out of this trade using our standard format exits, which we teach you in the course of the Elite College, so you wouldn't have had to take any losses once the news did come out. Here's another one that was just generated last month. This was another strategy number 4 signal. It was in the euro dollar, okay? This one was to go short on the 9th. Once again, these are strictly for educational purposes. We're not trying to tell you what to buy or sell. We're trying to teach you what to look for because ultimately you're going to have to do this on your own. So as we can see here, this was a little bit more advanced because price was above the 50, but this particular bar closed just a pip or two below. And it met all the rules, so it was a valid signal to go short on the 9th. A little bit more advanced, but it's still a valid signal. Now, if you just taken the standard format of trading the euro dollar, you could have exited this trade within the next week with a 110 pip gain. But if you wanted to trade more aggressively, which we teach you in the course on how to stay in longer, how to have a different stop placement, you could have stayed in this another week or two for a nearly 300 pip gain. And that's when the news came out of the Brexit news in Europe. So we knew well in advance to be short the euro dollar. Now, if you go to Pro Trader Strategies or you Google us, you'll see all of the testimonials we have from people that have taken our courses as well as our colleges in the past. I'd just like to read you one in particular from a gentleman who took our college. He says, Steven, I have been day trading the Forex for some time. I was hanging in there with good money management, but not really making any money. Since discovering you, the 50-period moving average, and using strategy number 4 since September 19th, I've locked in 873 pips and have 5 open trades sitting at 631 pips, all in the market. I missed a few. I only have to review the charts twice a day, which allow more trades and a lower risk than daily. Plus, I get to play golf and read a lot more. What can I say? But thank you for the education. I'm glad he stressed education because remember, we didn't tell him what to buy or sell. We just educated him on what to look for. Now he's looking great for the future. So this was an actual member of our Forex College that got over onto being a consistent trader after taking and learning our methods. So one last recap before we go into question and answers. Remember, this is 6 full weeks of trading tools and techniques taught in live classes. So I'm going to be your personal instructor in 6 live classes. We give you 3 proprietary Forex strategies. I teach you exact stop placement, exit, and profit targets, and numerous ones for you to pick and choose from to apply to your own personal trading. We provide you with educational signal service for a limited time so that you can know what to look for. We teach you conservative as well as aggressive versions. As a special bonus, we are throwing in the ATM and the PET D. So you'll be able to use those tools, which will really increase your odds for success. And along with all of this, all of these different versions, all of the placements, all of the strategies, you're getting 39 years of trading experience. Me as your personal mentor, I don't think you can ask for much more than that because this is not taught by someone who just has a perfect system that they've come up with on their own time. This is someone who's been trading for 39 years. So all of this is included in our Elite Forex Trading College. Remember, as I stated in the beginning of this presentation, successful trading should be non-subjective, it should be consistent, it should be as simple as possible, and it should make you a part of the process. I think you saw all of these 4 categories come into play today when I share with you and reveal these 3 rules. Now, that's only 3 of the 5 rules of the strategy, but you saw how non-subjective they were, you saw how consistent they were, you saw how simple they were, and you saw how they made you a part of the process. So here's how to become a member of our Elite Forex Trading College, become a student of mine. Remember, 6 weeks of detailed instruction, 3 proprietary strategies, all of the information provided here, as well as lifetime correspondence, okay? Now, this is instant access. We're providing you with this, and we're giving you a special discount for attending today. Our package usually runs for close to $5,000, okay? But what we're doing is discounting that today for all the attendees, and this is our early bird discount. We are discounting this down to $44.95, and we are offering payment plans. So even if you can't come up with that lump sum, you can give us a small deposit, and Pro Trader Strategies will work with you with a payment plan so you can still be attending the college and making payments along the way. This includes 1 year of trade signals, but this is for a limited time only. So here's how to take advantage of that. Remember, I stated Pro Trader Strategies handles all of my courses and all of my marketing and promotion of my courses. You can simply email them or call them directly at 310-598-6677. If you'd like to structure a payment plan, remember you can put a small deposit down and you can still be attending my class live. Now the link at the very bottom there, as you can see, is the link that will take you to the sign-up page with that discount. But it is not a live link. You would have to simply click that on, and it will, or I should say, you should have to copy that and then take it to your browser and click it on. But I believe if you look on the far right-hand corner of the chat box, Pro Trader Strategies is going to paste that link very soon, and so you'll be able to use that. While we're waiting, you can simply copy and paste that onto your browser, and you can be up and running as soon as possible. But the best thing I would say would be simply to contact Pro Trader Strategies. Once again, you can call them directly at 310-598-6677, and they'll be able to structure a payment plan for you. So you can just call them up, and with a small deposit, you'll be up and running and have instant access to the course. Okay? So I'm going to leave this information up. If you have any questions, now's the time to ask, and I want to thank you all for waiting. Let me see here. The first question is the most common, and is this being recorded? Yes, it is. Contact Pro Trader Strategies. They will send you a recording to this link, but don't take time to sit on the recording, because you may be waiting there for a while watching the recording and miss this discount that they're having, okay? So it would be best to take advantage of it, okay? Let's see, a question. When you say that you are throwing in the ATM and PET D, do you mean that we will receive the actual instructions? And if so, on what platforms will they work? Yes. In other words, well, we're not throwing in. They're a bonus. They're a bonus included with the 3 strategies and my instruction. Yes, we will be teaching you in those specific weeks. I believe in week 5, I will be going over all the rules and how to apply the PET D. And in week 6, I will be doing the same thing with ATM, Advanced Trade Management. But now, here are the platforms that these specific things work on. You can apply the strategies that will come with the buy and sell indicators, as well as the PET D. They work on different platforms. The main ones are MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use their live free stock data to run free NinjaTrader chart for free. So we'll help you get that all set up. So in other words, because of the way Thinkorswim is set up, they don't allow us to have the PET D or our indicators on there. So all you have to do is just take a splitter and use that data, and they will be able to apply that PET D to a free platform of NinjaTrader, which we supply and set up for you free of charge. It's included in the Forex College course, okay? Kathleen asks, do you use stops? Yes, in fact, I will be giving you, I believe, 5 or 6 different stop placements, different ways in which to apply your stops. So if you're a more conservative trader, I show you where to use conservative stops, and you can apply them. A lot of our traders say, well, Steve, I'm more of an aggressive trader. Well, I'll show you how to use more aggressive stops. I also show you specific techniques that are only included in our colleges for tracking the trade. So many times, you're in these really strong trending trades, a couple of examples I just shared with you. So instead of just getting out with maybe a 50 pip gain, you can stay in the trade longer by using a proprietary technique that I'll be sharing with you as well, okay? Lots of different ways to exit. Same thing with exits, lots of different ways to exits. Same thing with entries, lots of different ways to enter, and the same thing with stops, lots of different ways to stops. The beauty is we're sharing with you all these different variables, but then you decide what feels and works the best for you. Remember, that's the only way one becomes consistent. So I'm not going to say this is the exact way you have to enter each and every time, or this is the exact place you have to exit. We don't believe in that. That entirely goes against our philosophy. What we do is we provide you with the tools and knowledge you need, and then we work with you to structure it to fit your needs, okay? So I give you the basic format, the basic shell, but then allow you to mold it to suit your needs, okay? Let's see, next question is, what does consistent mean? Well, let me first state with what most teachers like to share with their students, or what they want to provide you with. Most, if you ever look at the ads in the magazines or on the internet, everyone says we have a profitable system that generates thousands of percent per month. It hits these home runs. We made this trade, and look how many pips we generated, or look how many points we gained. Okay? Because that's what they're looking for. They're looking for home runs. They're looking for these very big, large gains. And that's fine. Okay? That's fine to do that. But that's not what we're looking for. We're looking for consistency. We're looking for 2 steps forward, 1 step back. Now, does this mean you won't have these large runs every once in a while? No. I mean, you can have, as I showed you in a few examples, but it's up to you to decide. All we're sharing with you are techniques that have shown consistency in the last 30 to 40 years. And, you know, I don't think there's any means they're going to be stopping right now in terms of their consistency. And so that's all we're looking for, because in the end, a get-rich, system is not going to sustain you, because I've known hundreds of traders that made hundreds of thousands of dollars on these get-rich-quick schemes, on these systems that, hit home runs. And guess what? Not one of those traders is trading anymore. Why? Because their system gave it all back. They lost all the money. So I don't believe in that. What I believe in is a more consistent approach, 2 steps forward, 1 step back. That's what consistency is, and that's what we teach to all of our students, okay? What is the expectation of each method? Well, the expectation is only what you put in. In other words, we're giving you the tools and methods. It's like someone giving you all the ingredients for a fine meal. And then you're the cook and you're the chef. And then I ask you, well, what's the expectations of a delicious meal? Well, it's up to the chef to put it together. You're the chef. We provide you with the information, but you've got to make it fit your needs. So the expectations come from you, not from me. I can only point you in the right direction. You have to make your own decisions. But guess what? I'm pointing you in the right direction with the same things that have sustained me for nearly 40 years. So hopefully you'll be able to have that consistency as well, okay? Great questions. Any more questions? Remember, if you're really serious about taking your trading to the next level, sign up for the Forex College. It's 6 weeks of me as your personal mentor. It's going to be a lot of great knowledge you'll be able to use, and a lot of information coming from someone who's been trading for nearly 40 years. Nick asks, what percentage of your account is at risk per trade? Well, once again, this would only, the only way we could answer that, Nick, is if we had a system. But as you saw, we don't teach systems. Systems require you to trade the same exact way each and every time. And if we did that, then I could tell you exactly what the percentage is. But because everyone trades differently, we teach you aggressive trading, conservative. Everyone's going to have a different percent of their account. So it's up to you, okay? Let's see, next question. Is it working in a backtesting exercise? Well, first of all, once again, just as if I answered that last question, in order to backtest something, it can only be traded the same way, okay? We have the standard format that we teach you, and then everyone trades it to meet their needs. So that means for each and every trader, the thousands of traders we have around the world, okay, we, can't keep records of everyone's trading. So there's no way to keep statistics. You'll be able to monitor and see how well you're doing, but in a positive way, it's going to be, once again, up to you to supply your own equity curve and see how well you're doing. All right, we have traders who are doing marginally well, trading the same strategy that someone else is trading that are doing fantastic. Why? Because they're all trading them differently. Remember, we do not teach or trade systems. The only way we could have statistics would be is if everyone traded at the same time. And as I stated in the very beginning, that, in my opinion, is a recipe for disaster, because no two traders should ever trade the same. If you do, trust me, it won't work out in my experience, because if that were the case, then why aren't 80 to 85% of all traders profitable? It's the opposite. 80 to 85% of all traders fail because they're trying to copy a specific system the way everyone trades. It doesn't work, okay? Once again, as I stated, we are an educational company. Our only goal is to educate you so that you can make your own trading decisions. Okay, once again, for the people that were asking about the percentage of your account, remember, we teach you the position sizing technique so you can decide for yourself how much you want to be risking per trade, per setup. Any more questions? These are great questions. It seems like you all got experience, but trust me, if you really want to take your trading to the next level, I would really strongly suggest you come on board as a member of my Forex College. Remember, live classes. I'm going to be your personal instructor. I can answer your questions personally in our small, unique setting of small amount of traders, not classrooms of 200, 300 people. Usually the classes are roughly around anywhere from 20 to 50 students, and we can take our time as long as we like in the classes. They're live classes, so they're a great way to get together. You saw the testimonials. If you're any way interested, contact Pro Trader Strategies. They have many trading consultants that are manning the phones right now. They can answer any question you may have, and also they can work together with you to devise some type of payment plan so you can come up with a small deposit and you can still be up and running and have instant access, okay? I want to thank you so much for attending today. I hope you got something out of it. I hope you can use these 3 rules that I shared with you today. But if you want to get the full gist of everything of how Strategy 4 works, along with all of our other methods and techniques, please sign up to become a member of my unique and Elite Forex Trading College, okay? Thank you so much for attending. And before we go, one last chance here to sign up as well and join me in Chicago for the Professional Traders Summit. Remember, the 20th, 21st, and 22nd. It's coming up very soon. Contact Pro Trader Strategies as well. I believe they have some discounted tickets as well as some free passes. So contact them if you're interested. I'd love to get together and meet you and talk with you over a drink or over lunch and be able to discuss some more trading ideas, okay? Thank you so much. I look forward to all of you becoming students of mine and becoming members of the Elite Forex Trading College. I'll see you next time. Bye-bye.